Bitcoin, the macro indicator of crypto, but how can you read it like a book? We are doing a two-part series where we're going to cover pattern and price. Today, I'm going to share with you something that most people don't know, but it's going to allow you to see very clearly where's the high probability end of a trend before it reverses on both sides. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. All right, Bitcoin. We're looking at a daily chart. The high over here, the date is the 29th of March, is this original or initial move to the downside. So there's really two things that I want to cover. You want to know that the markets moves in fives and threes, time and time again. And when you see an identifiable pattern in advance, you want to address it. So what I'm seeing here with Bitcoin is on the downside, and we want to be really, really aware of this, is a very clean 5-wave sequence. So we're using TradingView over here. It allows us to draw on the chart. So it looks like a nice wave 1, a wave 2, a nice clean wave 3. What looks like a wave 4 is forming, not confirmed yet. And after a wave 4, typically comes a wave 5. Right? So that's what we're seeing. That's part 1. Right? Part 1 is identify if there is an obvious count. And by the way, if you want to learn how to do Elliott waves and these basic counts, take my free Elliott wave masterclass. Is in the link below, and I cover the key rules on how to do this. But what makes this more powerful is understanding that this wave 4 and this wave 5 have a relationship. Yes, they are related to each other. And if you know the relationship, you can project in advance where the end of wave 5 is very likely to be. So before we cover that, which is going to be the main focus of today, I want to just address a rule, an Elliott wave rule, which I covered in the masterclass. One of the key 3 rules is what a wave 4 should not do. What would invalidate this current wave count? Where if this wave 4 trades into the range of this wave 1, this is what would invalidate the wave count. But there's a big gap over here, so it's very unlikely. Anything's possible because we can only do probabilities and never certainties. But this was the only thing that would invalidate the wave count. But everything is pointing in the direction that we're going to see a movement to the downside. So what would be the first indication that this wave 4 is complete? Well, a trade into the range of the previous wave up. The final confirmation will be going below this swing low and then this swing low. That's the final confirmation of a wave 4 high. But what we're going to do today for today's exercise is just make an assumption, because it's looking like it's ready to end. We're going to make a best guess to go, okay, if the wave 4 ends in this region over here, where is the price likely to go? So the key thing that I'm going to share with you today is something called external retracements. External retracements. Normally a retracement is within 100%. Here is an external retracement. And what it lets us do is it lets us measure wave 4 and project where is the very high probability end of wave 5 target zone. Right? End of wave 5 target zone. And it's very simple once you know how to do it. So we're going to use a tool called, I think it's called fib retracements. It's the normal fib retracements, but there's a trick to it. We're going to click this low to this high. And we're going to select 2 ratios. The 2 ratios is 1.272, which is related to the golden mean 1.618, and 1.618 in itself. And you can see we have this range. Now, that's it. This is now a very high probability zone where the wave 5 will end. Doesn't mean it cannot go beyond. It's just a very typical range. And after a 5-wave sequence, we should anticipate a correction back up to this side. So if you want to learn how to do this, what you'll do is when you take my free Elliott wave Fibonacci masterclass, you'll get an opportunity to buy my course. And on the course, you'll get a login page, which is this. You'll be able to log in. And once you log in, you have your course over here. It'll look like this. And we've got a massive discount going on right now. But the course is broken down and it separates Elliott waves in terms of the real. It's really, really going to depth. and then the Fibonacci ratios, and it looks like this. And it's one of the most powerful tools that I've ever seen and ever learned. That's hence the reason I use it, because I tried and tested a lot of different things, because it allows you to read the market psychology. So what we're going to do in this two-part series next is, in the next part, in a separate video, is we're going to look at another key Fibonacci ratio and a relationship between what we're calling wave 1 to 3 and wave 5. And then what we find, and what we should find, if there's a confluence, like a cluster in the same range, it makes it very, very high probability. And I'm going to share that with you in the next video. So if you like today's content, again, like, subscribe, hit the bell notification. Hopefully this content is making a difference, and it's practical for you to give you an edge on the market. So let's finish on a quote today. I'm going to keep it simple. I even know it's chapter 5. It's Leonardo da Vinci's quote. Simplicity is the ultimate sophistication. And ideally you want to have a simple strategy which allows you to be consistent, mechanical, objective, and it allows you to be practical where you can take action. And I just found Elliott Wave's Fibonacci is one of the best, because it's very simple once you know the basics. So do take the free Elliott Wave Fibonacci Masterclass. Tune in for the next video where we're going to combine another ratio for really how to read Bitcoin like a book, and especially when it's identifiable 5-wave sequences. So I'll see you in part 2 of how to read Bitcoin like a book. See you soon.